It is time for another markets review. Yay! I'm going to drill down. Some time has passed. I'm going to do the Toronto Stock Exchange, the Toronto Stock Exchange Venture for those baby stocks, NASDAQ, SPX, New York Index, the Emerging Markets Index, and the MSI EAFE. I think that is Europe, Asia, Far East ETF, covering those markets. And it's important to take a look at that. I know we trade stocks, but sometimes then you find these nice stage 2 stocks, and after that you look at its industry, its peers. Is it in stage 2, or is it outperforming its peers? And then is it outperforming its peers in the sector? And then you look at the index, right? Because you also want to be able to go in stocks when the index is turning down. Before that, there were probably some stocks already turning in stage 4, right? Before, when it starts going down, to bring that price action down, and some are laggards. And eventually then you're going to see more and more. You're going to be looking for stage 2s. You won't see them. Then you'll turn around and say, hey, where are my stage 2s? Well, they've been stage 3s, and they've been dragging this index down, guys. But I'm always looking for the overall health of all these indexes, and when they start breaking down one after the other, eventually the SPX 500, like they all tumble. So you have one, then one or two, one recuperates. And if you go back to 2008, they all had some pre-falls, some tops starting to go down already, breaking down. This was the high back in May 2007 for the venture. But at the end, after that, they all, see, even this one in July 2008 was breaking down. July. So it was already breaking down way before the rest of the market broke down in September, guys. 2 months before. And these venture stocks, right? People taking out the money, putting it in blue chips. Toronto Stock Exchange topped, the white line topped in May, and it broke down. It was the last one to broke down, I believe. When Toronto Stock Exchange broke down in September, they all broke down. I think the commodities and the energy were the last sectors. There was some rotation. They were the last ones to capitulate. But the real estate was already broken down way, like a year before real estate was already broken down, that sector. So let's do it, guys. Let's do my monthly chart trading framework. And look at that. Wow, look at these highs. Never came back. Okay, what do we have here? So I identified a high in January 2018. Look at that red candle. The trend is your friend. Down. 12-month moving average, angling downwards. It's very powerful. And as long as the price action is below, you don't want to buy that index or an ETF covering that index. Long wick. All right, buyers coming in, pushing the price back up, getting close to the breakdown line right here. But now this month, down. So this is not super duper, guys. This is like the false hope when it comes back up. And on its way down, now you have an opportunity if it closes below, right here, below this consolidation pattern after the breakdown line. Timber. Okay, TSX. This is the high. Was it a false breakout? Right here, I had that breakout, monthly defined breakout. And that wick just got sucked back in. Tried. High, low. Now we're back within. Is it going to, the end of the month, is it going to close above? I want it really to close above 16,200. If I don't close above 16,200, not super duper. Then after that, the last line of defense for continuation of that stage 2 on the monthly chart is you don't want to close below the 12-month moving average. You don't want to be there. It could go sideways, and it could start going down, could go back up, but you're one step, if your price action is below 12-month moving average, you're one step closer for it to go down. You do not want to be there. So 1, 2 months and counting, going back within the pattern. Let's just see what happens for the TSX, guys. NASDAQ. Okay, so this one, August, I had identified the high, or it's a new high. And now I still have my trend lines here, and I started saying, hey guys, it's starting to look parabolic. Well, it could stay parabolic, I guess, a long time. I don't know how long. I know, does it really matter? No. We just want signs that this is a top. We want signs to see if it's in stage 3 or if it's going to go down. And right now it's still in the stage 2. It's still above. There's no breakdown signs right now other than a red candle, a pullback, and then buyers coming in to bring it back up here. So right now, NASDAQ, still a push. Still haven't surpassed the previous highs, but on track maybe to doing that, very close. So we have to let that marinate a little bit more before we get to say that it's out of its stage 2, guys. It's really not yet. SPX. All right. Pretty cool sideways move. Bounce off the 12-month moving average. Consolidation pattern, very healthy. Broke out and en route to the target up here, guys. So the SPX 500, nothing to say. It even surpassed the previous highs. I could even move that to reset the time bomb clock. Uptrend, even better looking now than the NASDAQ. It's actually, better looking. That is healthy. Eventually, towards the end of the stage 2, you see how this is a nice base you want to go in. This is what you want. Low volatility, not even coming close to testing the 30-week the moving average, in this case the 12-month. But at the same time, not going too far away, right? Because if it goes too far away, then it's like a magnet. It gets sucked back in. It's violent. It looks like this. You could get whipsawed. Your emotions could get scared. And then the volatility settles in. And the only way to get rid of all this volatility or away is you need some churn, some sideways churn. And hopefully it resolves. You still have momentum. You still have catalysts. It resolves in the direction that you were in. And so this sideways move for about 1, 2, 3, 4, 5, 6 months. Broke out. Boo! En route to target. New York Composite. Kind of looks like the SPX 500. See how far it got away from its 12-month moving average. All the way up here. Wick. Selling pressure. Bring it back down. Then getting a nice red candle the next month. And all these wicks here. This is buyers coming up. Defining this support line. And right now, it's continuing at stage 2, guys. So next line of resistance is going to be right up here. And eventually maybe challenge for those previous highs that are 1, 2, 3, 4, 5, 6, 7, 8 months. And we'll see what happens when we get right here, guys. Wow, this actually opened below and gapped down. But see, the month started gap down, then close up. Always if you want to make sure, if you want to find an excuse to get in the stock, you're not sure, well, just go check the monthly trend, monthly candle chart. And if you don't have a close above the 12-month moving average, then you don't want to be in that stock. You don't want to own it. And if it's below, then if it's above the 12-month moving average, you want to own it, or you don't want to short it. Actually, you don't want to short it. And if it's going down 12-month moving average, then you don't want to buy that. You're going to look for shorting opportunities. So this is still stage 2, guys. Just anticipate maybe a pullback here. We'll see what happens when we get to these the 13,365 levels. EFE. 1, 2, 3, 4, 5, 6, 7, 8. 8 months in, 12-month moving average. Man, it's flat. It's starting to go down. Or not yet. Very close. So we haven't breached these highs since January, since the beginning of the year, guys. Is this where's in the venture? Yeah, same time as the venture, these two peak. Price action going down. The more, even if it's a green candle, the longer the price action is below the 12-month moving average, the more it's going to start flattening, angling downwards, creating that downwards pressure. And when you hit it, instead of going through it, you might bounce. You have more chance of bouncing down, guys. So here we have some support. So I don't know. In here, some resistance. So we have a small pattern right here. If you want some extra detail to see what's happening around these levels, we could always cheat and go on the weekly. Yay! Stan Weinstein to the rescue. Stage analysis. And this has been in a stage 3 and a stage 4 for a while, guys, right here. The only reason we wouldn't have, I wouldn't have thought about shorting it is I still had some Ichimoku cloud defined support right here. You see how it brought the support, dragged it back up. Now it went down right here. It would have been a good place to short. Goes down, pull back, and now we're testing. It went through, so that breakdown line is not correctly identified. Or if I would have identified that breakdown line, the fact that it goes through means it wasn't meaningful. It means maybe I misinterpreted this candle here as a valid support. But here, here's a valid previous support, now turn resistance, what I call a wall. Tested it once, and then oh, okay, now that's resistance. Try again, or close, no, down, and now it's trying again, guys. This candle is very important. So let's see where this candle closes. If this candle closes red, and here you see it on the Mansfield relative strength compared to the SPX, if it goes like that, and we get a V shape, then I know that that's the lull. I have confirmed the lull, a pullback, a V shape. And then if the close is maybe below that Ichimoku cloud, this could be a nice continuation short, guys. Right here, bounce off the 30-week moving average, out of the Ichimoku cloud, on contracting volume, hopefully here. Our side, the Mansfield relative strength. So comparing to the SPX, you're starting to go down again. You never want to short a stock if the Mansfield relative strength is going up, even if it's below the zero line. You want to short it when it goes down, and even better if it's crossing over the zero line, or you have some other type of weight of evidence that's it's going to bounce back down and not revert and go back up. So that's how it's drawing out, guys. So that the next following week is going to give a candle. It's going to give a better look. So this could be in a stage 4 right now, just as the Toronto stock venture is. All right. So we're going to see this week maybe if it's going to close a little lower here. Final, but not least, emerging markets. Again, January, guys, time moves on, man. Not even coming close to surpassing those highs. What does that tell you? Look at that. Previous important resistance, now turned support. Broke down out of support here. And now went back up, pull back, test. No. Down. You have some buying pressure. All these wicks. That's buyers bringing back the price. Still not enough. Went all the way down here. Buyers pulling back the price. And you could see my monthly target here was reached. So I don't know how that thing's going to set up, guys. 12-month average going down. And we're going to have a stronger pullback. Back here to our previous breakdown levels. That support now turn resistance and then go back down. That's a possibility. Right now it's stage 4, but I couldn't jump in right there. You want good risk to reward entry. You want to make sure you're protected by important resistance. You want to make sure you're protected by the 12-month or now the 30-week moving average. Look at that crescendo, red candles. Not good. On the way down, pullbacks. Green candles here on these pullbacks here. So let's just see. Right now, I would just wait it out. I wouldn't short emerging markets. You're below the Ichimoku cloud. I'd really wait. and see if you could test that here. And then maybe go back down. So you could play it here. And after that, eventually, maybe if you don't grab it here, you could play it once it breaks down here. Here you're ahead of the group. And especially if it's pulling back, if it the green volume lowers here, it's a good sign that it's gonna resist. And then you always have the 12-month moving average in your back, guys, protecting you in case of doubt. There you go. Oh man, looks like baby scribbles. And that's pretty much it, guys. We did the markets. It hasn't changed that much since last time, except the SPX 500, the New York Stock Exchange, looking a little better, and the Nasdaq red candle for now, but still hanging in there, and the TSX reverting back, really struggling with that stage 2. That's it, guys. See ya. Ciao. Do, 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 do.